Hey, welcome to The Explainer. Today, we're going to peel back the curtain on something we all use literally every day, but maybe don't fully get: banks. We're about to go on the secret journey your money takes the second you deposit it. So let's follow the money and find out what really happens. I mean, we all kind of see them as these giant, super secure vaults, right? It's a safe place to stash our cash, maybe earn a tiny bit of interest, and, pay the bills. And yeah, it's a simple, comforting idea. But that's only a sliver of the real story.
Right, because it's not just about moving money or storing money, it's about creating it. Yeah, you heard that right. And that is the big secret we are going to unpack today.
Okay, so it all kicks off with something super simple, something you've probably done a million times: making a deposit. But here's the thing: that one simple act looks totally different depending on which side of the teller's window you're standing on. And this right here is the core idea of banking. For you, that deposit is an asset. It's your money, safe and sound. But for the bank, it's a liability. Think of it like an IOU. It's money they have to give back to you whenever you want it. This one little distinction is the key that unlocks everything else. So basically, this makes the bank the ultimate financial matchmaker. Their whole business model is built on one thing: connecting people who have extra money with people who need money. They're like the central hub of the entire economy. Okay, so the bank has your deposit, which, remember, is a liability for them. They can't just let it sit in a vault collecting dust. They owe you that money. So to actually make a profit, they have to put your money to work. And here's how that transformation actually happens. First, your deposit gets pooled together with thousands, maybe millions of others. This creates one giant pot of capital. Then, the bank takes that capital and deploys it as loans. We're talking mortgages for homes, financing for brand new businesses, you name it. They're literally turning our collective savings into the fuel for the economy. Okay, get ready. This is the part that is going to change how you see banks forever. We think banks just loan out the money that people deposit, right? Well, the reality is so much bigger than that. So just think about it for a second. When a bank makes a loan, say for a new business downtown or a mortgage for your friend, where does that money actually come from? Do they just reach into my savings account, pull out the cash, and hand it over? The answer is a huge and fascinating no. The big secret is a system called fractional reserve banking. Basically, the rules say banks only have to keep a small fraction of their deposits on hand in reserve. And the rest? Well, they can lend it out. And this is where the magic really starts. I mean, just let this quote sink in for a second. Banks create new funds in the act of lending. This just completely flips the script. They aren't just passing money from one person to another. They are literally generating it. So here's the absolute mind-blowing part. When a bank approves, let's say, a $50,000 business loan, they don't go into the vault and count out the cash. No, they just type some numbers into a computer and poof, 50,000 new dollars appear in the borrower's account. Just like that, new money was created out of thin air, and the total money supply in the economy just got bigger. Okay, creating money out of thin air sounds, well, it sounds incredibly powerful. And it is, but it also sounds kind of risky, doesn't it? So how do banks manage all this power? And way more importantly, how is your money kept safe in the middle of all this? Well, it's a constant tightrope walk for them. They have to juggle a few huge risks. There's liquidity risk, that's the big one, the nightmare scenario where everyone shows up wanting their money back at the exact same time. Then there's credit risk. Are the people they loaned all this money to actually going to pay it back? And on top of all that, they have to worry about interest rate risk, because even small changes in rates can totally change their profits. But that brings us to the question that probably matters most to you and me. With all this high-wire action happening behind the scenes, what's to stop you from losing your hard-earned savings if a bank messes up? Well, in the U.S., the answer comes down to this big number right here: $250,000. That's how much the FDIC, the Federal Deposit Insurance Corporation, insures your deposits for. This government guarantee is basically the foundation of our trust in the whole system. It means that even if your bank goes under, your money, up to that limit, is safe. And the protection doesn't stop there. There's a whole rulebook of regulations designed to protect consumers like us. You've got laws that force banks to be upfront and clear about all their fees and interest rates. And then you have fair lending rules that make sure banks are judging you on your finances, not on anything else. All right, so we followed the amazing journey of a single deposit. Now, let's pull the camera back. Let's zoom out and see how this exact process, happening millions of times a day, becomes the engine that powers the whole economy. And who's in the driver's seat of this economic engine? The central bank. In the US, that's the Federal Reserve, or the Fed. Think of them as having a gas pedal and a brake. When the Fed wants to cool down the economy, it hits the brakes by raising interest rates. That makes borrowing more expensive and slows everything down. But when it wants to kickstart growth, it hits the gas by lowering rates, which makes it cheaper to borrow and gets that whole cycle spinning faster. And really, that's the whole ballgame. This constant cycle of deposits turning into loans, which in turn creates new money, that is the engine of our economy. It's what allows businesses to grow, innovators to innovate, and families to buy homes. It all connects back to this. So the next time you deposit some cash, just remember, it's not just sitting there, it's about to kick off a pretty incredible journey. And that leaves us with one last big question to chew on. As finance gets faster and more digital with things like crypto and fintech, how do we make sure the rules of the road can keep up? To keep this incredibly powerful engine running not just smoothly, but safely for all of us.